Okay, so now let's ask another question. Okay, common sense. Should you hire a security guard to protect a safe that has $1,000 of cash in it at any given time? Who thinks it's a smart idea? Who thinks it's a dumb idea? And why? Who wants to offer the reason why? Exactly. Okay. This is, again, goes to the risk analysis, risk assessment, right? In this case, you would say, yes, there's a risk here, right? Someone could rob that safe, whatever. But when you did a risk assessment, you'd be like, well, the exposure is not that much, right? If it was $1 million or $10 million in the safe, yeah, then the risk assessment is going to change, right? But for this case, it's not going to be worth it to put in a control procedure or like some control because it's not that much money. And the cost of implementing the procedure is going to be more than what you're going to get as a benefit. Okay, so again, this is to the second point. Uh, how should you think about cost benefit? Okay, really, you have to do a risk assessment. This is the point of the risk assessment: is to see what the exposures are, and in order to do a cost benefit, you need to know what the benefit is. Okay, the costs are easy. We can just go, call some security companies and see how much it costs to hire a security guard. But we also need to determine what the benefit is. Sometimes I guess the costs are harder, like to implement a new information system or something. Like the state of California, they paid Accenture, which is like this IT consulting business. I think it was like in the hundreds of millions of dollars to like come up with a plan to modernize its computer systems, and like it's like nothing ever happened. So they just basically paid that company to come up with a plan. They probably did, but then it just went nowhere. Okay, because for whatever reason, it was too costly to implement the plan. Our government is not very good at executing things, which is probably the case. Um, but yeah, it could be also not easy to say how easy it is to implement a procedure if it's a very big one. Okay, what about this? Are internal controls 100% effective? And what ways can it be broken? So who has an opinion on this? Exactly. You could argue all internal controls can be beat, especially through collusion. Okay, so if you have multiple people in a company colluding together, then you can probably beat most control systems. Okay, so yes, they're never going to be 100% effective. So you're gonna have to take. There's always risk. Okay, but you want to minimize that and make it hard for people to collude. Okay. I'm not going to dwell on this too much. Um, Basically, this is like a schematic for uh, cash payments. Okay, so you can see here, uh, you would have a system of procedures and checks in place. And this is in the case where you're going to pay someone money for something. Okay, so just to step through this, let's say you have some, like your research department needs a new supercomputer. Okay, that research department is going to be the requesting department. Okay, they're going to submit a purchase requisition. They're going to be like, okay, we need to buy this supercomputer. This is going to be some manager. Okay, some person in management who's been designated to decide what is kind of the budget, what is the proper allocation of resources of the company. They're going to either say no, in which case this purchase request dies, or yes. If yes, it goes to this next one. So now we have approval. Okay, purchasing is now going to create a purchase order. This purchase order is going to get approved. Okay, if it's yes, approved, it's going to go to the vendor. Okay, so um, the vendor is, the Cray computers, like the supercomputer maker. Okay, so they're going to get a purchase order that says that we want to order a supercomputer. Okay, um, they're going to send the item, okay, to our receiving department. So this is the next thing. So the goods arrive. Your person the at the warehouse is going to count and make sure it's the right thing, and they're going to create a receiving report. Okay, and so now all three of these things are going to come to the accounts payable department. You're going to have your purchase order, which says what you wanted. You can have the receiving order that says what arrived, and then you're going to have an invoice that says what is the vendor charging me for. Okay, so all three of these things should be the same. What you wanted is what you received is what you're being charged for. Okay, so once these are all matched and accurate, if there's no, then you have to figure out what went wrong, obviously. If it's yes, then you're ready to make the payment. Okay, so then you have a payment voucher that's created. This is going to be approved, right? So now someone is going to scrutinize. They're going to say, hey, let me see this purchase order. They're going to review all this documentation, make sure this is a legitimate purchase. Okay, so if it is yes, then the check or the EFT payment is going to be initiated. And again, this is in a different department, right? So accounts payable is accounting. The treasury department is the person who's actually handling the cash. Okay, so this is going to be another final review, right? Another person is going to scrutinize all this to make sure that it is legit before issuing the payment. So if it is, then they're going to release the payment and then the vendor will get it. This recording of the payment in the journal will then go back to this accounting department. Okay, so all this is implemented in the information system, right? Now it's like maybe like 50 years ago, it was like all with papers and purchase orders and it was all like paper stuff. Now this is all in some computer system. But the general documentation and the flow of things is the same. Purchase order, receiving order, invoice. It's all going to be the same, but it's just going to be in the electronic format. Okay, and again, even this, the purchase order to the vendor and the vendor sending an invoice, now there's like, there's electronic kind of exchanges between customers and vendors that make all this easy too. So it's not like you have to mail this to your vendor. Usually there's going to be some data connection between you and a vendor that you use a lot. That's going to facilitate that whole process too. Okay, and then there's a similar thing for cash receipts. So whenever you receive cash, um, it's going to be the same. I don't think it's worth going through. You can look at this on your own. I think the point I'm just trying to emphasize by showing you this is that there is a flow and a systems of checks and balances in these types of operations that happen in a company. Okay, and they kind of follow the same. There's some principles, right? There's usually some approval that's necessary. There's usually multiple layers of scrutiny. There's usually some reconciliation between different documents to make sure everything matches. So these principles are going to exist throughout these different kind of flow diagrams for these types of internal controls.